It's the weekly 30/30 trading list on the ASX. We're reviewing the 30 best momentum companies over the last quarter. And we also look at the ones that have had the best improvement in the last week. Gary Glover has been through both lists of the top 30 and pulled out his favourite trading opportunities, lessons from the market, and insights that we should be reviewing. Good morning, Gary. How are you?
Yeah, I'm great, Chris. Good.
Well, looking at the list, you've got, we'll do the quarterly momentum and you can tell us a bit about it. When you walk through these top 30 companies, which ones stand out to you the most, and whether it's opportunity or insights?
Yeah, there's a few good lessons in there, actually. Some great couple of handles, some BCP. So there's actually a new pattern there that I'm actually sort of been seeing a lot of as well. So I might even talk about that. But yeah, lots of interesting stuff there. That number one on the list there is red metal. Obviously, uranium, it's a bit of hot space and that the old red metal. But just looking at this sort of setup here, you can see a nice cup and handle on this sort of daily chart there, Chris. Obviously, first sort of spell there had a pretty good volume, sort of rounded it off and then had another rally up here. Had a nice little, tight consolidation there, no volume through there. And then we just started to see a bit of a pop through there. Once we've sort of gone through this level here, then it sort of kicked on there. So nice little cup and handle on that one there. But number two is interesting as well. Just a little pretty new company, Brazilian rare earths. So had a bit of a pullback up earlier. There's some pretty decent volume there coming through there. So interesting one to sort of keep an eye on. Zip, we sort of talked about that buy now, pay later, actually making a bit of a resurgence there. So noticed that we had a nice little tight consolidation there. You can see how it sort of it was pretty tight through there. The volume sort of dried up a little bit through there, and it sort of has kicked on there. So like a little bit of a ABC sort of broadening pattern there, then kicked on there. But I sort of noticed a lot of these. One pattern I've seen a bit of here recently, Chris, is some of these stocks that are, what I call sort of leaders there. I know sort of Zip is in our leadership group there, quite a few weeks ago. Some of them are sort of like, once they sort of get going here, they're having this, they're kind of letting go. They sort of, they'll have this run here, all of a sudden they'll pull back and they do this like classic little three-way. So like a little A, B, C, back to the 50. And then once they hit the 50, they just tend to take off and just go straight up. So it doesn't really fit our BCP model, doesn't sort of fit our sort of tightening or cup and handle, but this is quite different from what we're normally looking at. But I've seen this quite a lot recently, where the leading sort of theme stocks will just kind of they just kind of let go. They've sort of had a good run, and all of a sudden they'll have this little sharp sell-off, come back to the 50, and then all of a sudden, what's most impressive is the recovery has just been, so three-way pullback, and then just a power sort of move following it. So it's sort of something just to keep an eye on there with those leading themes. It's sort of this is not the classic setup here. This is not ideal coming back like this, but I've seen quite a few of these come back to the 50 and then go straight up here. So we're always trying to catch momentum. So if I sort of see something like this, I don't know, just kind of maybe I sort of wrote that down in my little trading book and just to trade to start exploring. And then it's like, when someone told me about the fallback technique on markets, how they trade into a point, they trade out of it, started seeing it everywhere. So I started seeing this pattern quite a bit as well. So pop up there. I think A2 Milk was sort of one that sort of got going here as well, and then had a little ABC back, a little false break here, and then it's just gone down as well. So you got come back to that 50. This was sort of one that I'd actually scaled into, Chris, and then because this broke the 50, I'm out. And then power's gone straight back up again, so a bit annoying there. But just something else that I keep seeing here recently on some of the leading themes. So just one to sort of maybe do a bit of homework on. A few nice VCPs on the list here too. So number 6, Carbon XT Group. I can see here this consolidation there, some good volume, pull back, some good volume again, just nice congestion there, bit of a nice jump again, and then, volume started to dry up in here, bit of volume here, and then it just dried up again. And then bang, we're starting to go through. It's a little small on the price-wise there, but once we'd sort of cracked the little B wave there, and this has gone from 7 hours to 12 so it's been pretty good volume through as well. So good little VCP set up there. The next one there, 3DA, Mira as well. So it's sort of something similar here. This sort of had a pretty big volume up into the high, pulled back there quite deep here, maybe a bit deeper than I'd like to see there. But then it's had another nice recovery. There's some good volume all the way through, and then sort of pull back again, and then a little bit of a rally, a bit of a congestion there, and it was sort of starting to sort of break up through like a little bit of a B wave there, just sort of starting to get some momentum here, some volume coming back in again. So another little VCP sort of through there. So that looked all right to me. SMI there, I mean, just again, some of these sort of smaller stocks that do start running here, just got to watch that sideways sort of behavior, Chris. So as McLaren used to sort of say, like see impulsive rally, and then you see a corrective decline, and then impulsive rally, and then a corrective decline there. So if your stocks are running hot, pulling back, running up, pulling back there. So I mean, what's one? I think number 19 on the list is a classic one here. This has been like impulsive, corrective, impulsive, corrective, impulsive, corrective sideways, impulsive, corrective sideways, impulsive, and corrective again, impulsive higher, corrective on a side, a little bit impulsive over. Even this as well. I mean, look, the last 4 days, there's no selling going on here. So still, I mean, I know it looks a bit long in the tooth here, but still can't see any selling here. No one's stepping into selling this just yet. So, definitely it's got to keep an eye on stocks like that have been running here. SLX, obviously, that uranium space has been pretty strong. So, again, just sort of keeps, impulsive moving and a bit corrective on the pullback, low volume, and rally again. Bannerman there was sort of one that was sort of impulsive and then sort of a sideways move, impulsive up there. So, we've got good price action here today after that up there. These have been pretty, you can see these sort of charts there, how they sort of, once they run out sideways and run up sideways to pop here, it's starting to lose a bit of momentum here. It's probably pretty aggressive selling here now. So, but yeah, you can see those sort of stocks have been trending quite nicely every time they pull back, nice and tight here. So, so one on the list there, I highlighted select harvest here just because the consolidation's in the wrong way. So oftentimes we're running up impulsively and then we're pulling back in a corrective manner and then pulse a bit. You can see this is like an upward facing consolidation there. So it's actually prefer to be consolidating in the other manner and then breaking up, not consolidating up here. So this is not the type of consolidation you normally like to see. You prefer to sort of see a downward consolidation rather than upward there. So that's sort of one that I wouldn't touch there. But HML, it's been a pretty good trade here. There was a nice little 0, 1, 2, 3 pattern there on the daily. I think our weekly chart there was like, it was a big false break there, Chris, as well. We basically came back, made a marginal new low, and then reversed there and then built from there. So I love those false breaks there. I mean, the thing about this one here is that's a false break of the low. Our theory suggests that it'll go back and retest the previous swing high, which is $7 there. So buying it for $7 target is a great risk reward. So you're risking maybe 10, 15 cents down here to make $3 there. That's good risk reward. Anyone's like, so that's why I like these sort of false break patterns sometimes. So definitely one to sort of keep an eye on there. That's mainly it from the quarterly list there. Just some nice little sort of cup and handles there, nice little VCPs. But yeah, just that little watching for the leading.
So you're noticing a lot of throwbacks in the 50 of companies that have already run, have a bit of a pullback, whether it's corrective decline or whatever it might be. They're making their way back to the 50-day moving average and you're seeing that being a fast reversal to then start running on and possibly surge to a higher high.
Yeah, so my real 7 is focus on consolidation patterns of the leaders, VCP, up and handle, rectangle, triangle, pennant, flag, breakouts, and pivot points. So looking for those other strong markets, and then waiting for the tight consolidation and then resuming the trend there. So that's what I've been looking for. But I've just noticed that some of the leaders there, they tend to let go, and then when they let go, I go, well, that's not really tight corrective price action. That's a little bit impulsive move. So I sort of just disregard them. But I've noticed a lot of them have just come back to the 50 in a little 3-wave manner, and then they just go bang off the 50. They just hit it and then go really marching on pretty hard here. So just something I've seen a bit of. So that's unusual. I thought maybe I'll just haven't noticed it before, but it's definitely sort of something. I'm always looking for a little, trying to find your edge, something different. Always trying to buy fast moves. We don't want to be sort of sitting and stuff that's building or moving slowly. So if we notice a certain setup where it tends to sort of roll off, hit this zone, and then explodes, that's I'm looking. We can make moves, make money quickly, and get an explosive move. Then I want to try and capture those. But it's just something I've noticed there recently. So for me, it was sort of something I wrote in my little, my little trading book there to explore. Go and actually sort of go and have a look at this setup here, see if this sort of setup is more interesting. It's a bit like the 0, 1, 2, 3 pattern now. I mean, McLaren tells that awesome story about the guy who came into a seminar for the first time and just did not get anything, and saw him a year later worried about how he'd gone, and the guy basically confesses, "I'm at 90% of what you said in the seminar went over my head, but I got the 0, 1, 2, 3. So all I did all year was go through the ASX. Might have been the All Orders. I might have been 300 stocks or something. Just went through the top 300, looked at 500 stocks it was. Just looked for the, three higher lows, and every time I saw the third higher low, I just bought it and with a stop. And he goes, how did you do for the year? So I was up like 45% or something for the year. We can't go, see, that's better than me. But it's just because you focused on one particular trade, master that trade. And that's, if you look at Minavidi, Kalamagi and David Ryan, all those guys, they're not trading bloody 20 patterns or 10 patterns. They're often just trading 1 or 2 patterns and just mastering them. So, but sometimes we overcomplicate this business. It's sometimes just looking for one little pattern, study it, master it, just, being able to control ourselves. It's definitely some power to that. Okay, so looking at the weekly list, you're going to ask me any themes in this weekly list. No real theme really jumping out of me. Definitely saw a few of yesterday's heroes in this list. So some of the smaller names that have probably had a good run in the past and probably have been sold off, beaten up, making a bit of a resurgence there. So is that late stage? Is that sort of not sort of old dogs. Obviously, they had a run in their own time, but they've basically definitely sold off since then, and probably been out of favour. But they've had feelings about a bit of a move here. So they have 40S and sort of one here like that. Had a bit of a surge here, but still hasn't broken a new high there. I think Brainship was another one there. It's another yesterday hero. So again, it's had a nice little surge here, but still hasn't broken a swing high either for us as well. So we're still in a pretty nasty downtrend, just having a bit of a surge off over here. The one thing with these sort of yesterday's heroes is that there's a lot of losers in the way here, so a lot of overhead supply. So because there's a lot of people who bought this stock at a much higher level, just looking to try and break even or minimize their losses there, you're going to be up against a sort of wave of sort of selling for these things there. Even Clean Seas was on the list as well. They had a bit of a pop. Probably a bit more interesting there, just because it sort of had that exhaustive type behaviour into the low. A few volume days and a bit tight there, and then popping out there. But still quite a few yesterday's heroes in there. So they're gonna struggle to sort of make headroom there. I guess a lot of selling there. There's that AFG. Had a little 3-way pullback, just broke below the 50, but then has just and just surge bang off that low again, So just kept seeing this last few weeks there. I don't know, maybe it's just the type of market we're in at the moment, but definitely an interesting setup. Noticed Syrah sort of one that I was sort of watching here. I thought this might have had a bit of a nice little surge previously. I was sort of waiting for a little VCP in here, but it never really sort of came here. But it did go down and make a new low kind of twice here. Made a little false break here, but never really got going. Came back and, I didn't trade this one here, but I probably did trade that one. I probably would have got shooken out as well. Like it's sort of gone back a little. One little trick there for looking at these false breaks sometimes, and also the trading as well, is that I've learned this the hard way over time. Is that, say there's a low there, what's that, 37.5, then it starts to rally here, then okay, so I might put a stop in at, say, 37, so really tight. Yeah, so if it goes below, if it breaks back down to low, then I'm back out again. In the last sort of year or two there, I sort of try to give myself an extra cent or two room, because I just know sometimes I'll just flutter back, flirt with a low, maybe even go half a cent or a cent, and then kind of pop as well. So you can see here that 37.5, I think it came back down to 36.5% below, and then pop back here. So just give yourself a little bit more room sometimes, just an extra cent or two on the low, just a bit more breathing room there, because the market does like to go back and retest the zones, shake people out at the very worst time here, and just kind of flirt with that extra, might be half a cent or a cent sometimes then. So just giving yourself an extra 1 or 2 cents leeway on the stop there can be pretty beneficial. I think as some of the great traders will say, give yourself a bit of room, give yourself a chance to be right. And so it's something that I hear quite a bit. So we're all trying to keep our risk low, and I for me, I'm all over risk. I'm trying to minimize, what I lose. That's all really pretty much. That's probably the thing I focus on the most, is what am I risking? What am I prepared to lose? And that's the thing I'm constantly looking at every day, is sort of my risk. So, but just giving yourself a tiny bit more room is, can be really beneficial. I just noticed in the last couple of years, I've just given myself an extra cent or two, and so many times it's come back within a whisker of it and not hit me out. A2 milk is not one of those. That's one that definitely did hit me out. But a lot of other trades that I've been in there sort of come back, retested by half a cent, too, and I've given myself a bit of room. It's definitely been beneficial doing so. And quite a few retailers have been pretty strong, Chris. A lot of retail names sort of popping out of ranges there. So I noticed Adair's there, bit of a corrective. I mean, this is sort of impulsive here. This is sort of sideways overlapping, and just start to rally here. Notice AX1 actually is sort of, again, that's a bit of a VCP in there, Chris. Almost a bit of a cup and handle, pretty tight up here. Volume's not awesome, because I noticed a bit more volume on the down days than the up days, which is probably the reverse of what you want to see. You want to sort of see strong volume surging there, but so many, we saw Maya pop out of the range, a bit high fights out of the range from Julius. I mean, even that's still sort of corrective here now. There's just so many of those retailers have really have been popping out. So pretty interesting sector there. BVS Bravura is and just keeps having these sideways consolidations there. Impulsive, corrective, impulsive, corrective, impulsive, corrective, and then just popping up here again. So we get going through a little B wave there, and then we're off again. So to think, until your stocks really show some signs of sort of doing something different there, you got to sort of try and stay with them.
Give yourself a chance to be right.
Give yourself a chance to be right. Exactly. Consensus is pretty interesting. This is this is a bit. That's had a pretty strong run there, pretty impulsive. Had a bit of a pullback, but the whole thing's now tightening up here. And again, a bit impulsive. It's sort of pulling back here. The whole thing's sort of almost going to slightly higher there. It is sort of tightening up here. Consensus is the one that's got the software for capturing you on your phones and cars and stuff there. So it's getting rolled out New South Wales, Australia. So if you've ever been pinged by, picking up your phone in your car with a camera and you get your 150, $190 fine, this is the company. So it's got the software. So I think, it's getting rolled out in the States as well. It's a pretty interesting little group. It's a little bit lightly traded here, but definitely can sort of what's I'm just trying to think of the trader there, basically talking about sort of, don't think about don't think about what revenue or earnings a company is producing today. Think about what they might be producing in the future, and you got to sort of try and look at companies maybe 12 to 18 months from now, sort of try and imagine what they're earning then. That's sort of, this is definitely one that I can imagine this company making a lot more money in the future. So definitely want to keep an eye on it. Just a bit lightly traded, that's all.
Sounds a bit like William O'Neill talking about being with those new market leaders, new innovators, kind of that space. He always likes to look at the new companies to see how they performed, and quite often I think he was from a mega stocks perspective. He'd say, look, they'd be 5 or 10 years young. Is that kind of what you remember from reading in O'Neill?
Yeah. I think actually, so this one actually was Stanley Druckenmiller was actually talking about his first years sort of in the business, and because he was quite young, and obviously he basically sort of came into a role where it was a major bear market that lasted many years. And he got promoted really quickly because his boss sort of said, and everyone else has got scars here, will be hesitant to pull the trigger, where you've just come in, you don't have any of the scars. So you'll be, so he was telling people, you got to buy this, got to buy that. And like everyone else was afraid, and he ended up all these calls when the market turned and went up, it was up like 100%. And he got promoted just only because his mentor or boss thought, you don't have the scars that everyone else has got. You're going to be a little bit more aggressive, a bit more ballsy than everyone else. So, but it talks about that. And then it talks about, looking at the companies, looking forward, don't look at what they're earning today. Look at what you think they're going to be earning in 12 to 18 months' time. That was sort of the other thing that his mentor had sort of, that caught him. So, but yeah, looking ahead, almost try and disregard the bear markets that you're in. If you're in them, you got to look ahead. That's interesting stuff. The other one on the list, number 27, this was actually one that I did trade actually. This was ABB, nice little VCP in there. Again, you've got that really impulsive move here. Pretty bullish there, bit of a pullback there, and then the whole thing's just sort of tightened up. There's a bit of a leading sort of stock in that pretty strong growth. Aussie broadband, and once we sort of break a little B wave there, it's sort of tightened up here. And for me, I've sort of been trading a bit lightly just because I'm a little nervous market there. It would be nice to have been a bit heavy on this one, but yeah, just sort of took a small position, did a right there.
Just as you load the next one, this name is familiar from your Tuesday recording where you had your weekly report, and this was one that you had in your portfolio for clients as well, wasn't it?
Yeah, that's right. Yeah, I did actually. Definitely sort of set this one out there for clients to sort of look at there. Sort of, it's good, pretty good company there. I mean, like I like the weekly setup. That was probably portfolios there probably sort of sits a bit more better, just because that's sort of that whole thing's pretty tight in there. It's also whole thing's sat above the previous high, so that's what we call bullish spacing. So when I say bullish spacing, like Clara would always talk about, there's the market basically sits on top. That's pretty positive, but if it leaves spacing, that's even more positive. That's it's usually that's when markets can get aggressive, then really get going when you get that spacing there. So it does look pretty positive in that regard. I know, funny actually, sort of one or two clients sort of reached out regarding this one there, and they're looking at Elliott wave and other theories and stuff as to why it wasn't going to go up. Not saying I'm right, I'm happy to be wrong there, but it just kind of made me think, just while looking on the list this morning, made me sort of think, like the problem is sort of some of those sort of, got to be careful with some of the technical theories, like Elliott wave is about, the wave count and then predicting the next leg and stuff there. And even GAN as well. GAN's actually a lot about timing as well, like certain time cycles. And then, So the problem with some of those theories, Chris, is that they can lock you in to a certain thinking, and then you're not flexible enough to get out there. I was thinking, oh, the timing's right, or I might be a day or two out. So you might sort of stay in the trade an extra day or two because it's a timing based sort of thing. So you might actually put yourself under more pressure. And the Elliott wave too, you sort of can lock yourself into a certain thinking. Oh, it has to be, it's the right wave count. This is the right timing count there. So, I mean, those theories are good. It's actually really worth investigating those theories, understanding them, but you can't lock yourself in to each theory. The thing I've learned over the years is you lock yourself in there, oftentimes you lose money for locking yourself, and they can give you, they allow you to sort of give you too much more room there. Whereas you understand those theories, but just don't let them lock you into a certain view. You've got to be, as a trader, you've got to be flexible. So, I can been watching a sort of stock there for a month, waiting for the sort of setup, and then bang, position on, and within the first couple of days, it's not acting right, I'll be straight out. Something I've seen something I see like a day later, I've only spent 15, 20 minutes on, oh, this looks really, really good, bang. And then I'll put the trade on. Maybe I haven't done much work there, but it sets up and does everything right. Trade there. So you've just got to be flexible in the market. You've got to have an open mind in the market. So just great to learn these theories. Just don't lock yourself into those theories. Trust me, I've probably spent the first decade doing that. And yeah, kind of mistake there. So try and stay away from locking yourself into, certain theories there. Hey, one that we mentioned a few weeks ago, Chris, was FND. So you have a little tight consolidation and popped out there. But there's one here that I was sort of watching here that this one's had a pretty impulsive move. This eye here and then tightened up here. So definitely one to keep an eye on there. Just whether it lasts a bit long. FND ended up consolidating for a bit longer than I thought. So, but yeah, definitely one to sort of keep an eye there. That's a pretty nice tight consolidation there. Yeah, pretty nice, good volume too, but nice and tight in here. So, yeah, definitely want to keep an eye on that. Yeah, quick lesson. For me, I had a pretty good week this week. So Thursday, I locked in pretty decent profits. And also sort of like the start of the week, I traded out a lot of my ResMed. ResMed's probably been one of my biggest holdings for the last probably 4 or 5 months, and had a pretty decent move there. So banked a bit of that. So overall, sort of was a really positive week for me. But within about 10 minutes of me banking in pretty good profits the other day, I was on Twitter and I just saw a little message come up, and basically it was don't be a hero, don't have an ego, always question yourself and your ability. Don't ever feel that you are very good. The second you do, you are dead. That's Paul Tudor Jones. I mean, he's an all-time great. So that kind of like, sometimes the world's trying to tell you stuff. So within 10 minutes of sort of me giving myself a pat on the shoulder, it was just a message just to remind me, stay grounded, stay humble, just do the work, get on with it. Don't celebrate too much. And just make sure when you've had some good wins too, best thing you can do is even being more selective about the next trade you do, because oftentimes, if you're in this game long enough, probably some of my biggest losses have followed some of my biggest gains. And that's because you sort of, let your ego or get in the way sometimes and you stop doing the work or, whatever. So just, when you do in future, if you do lock in a really good gain, big gain, double down on your work, double down on your discipline for the next trade there, because that's usually when you're probably most vulnerable to make a mistake. So good lesson, really. We've had a pretty nice period, made some money, is to get even more disciplined after you've had a good patch.
That's really useful insights, because we know, and as you've studied with history of traders, your own trading and your own clients, that quite often after those really great wins, they can become a little bit more lax, a bit like a gambler in a casino, and just throw on some extra bets and throw on some ones that don't fit the mold, don't fit the rules. And I think you were saying, after studying the last few years, that's possibly when your greatest losses have come in. after your greatest wins. So keeping it tight is something what you've been referring to.
Yeah, so you might stop putting, last 4 or 5 trades, I've just got them all right. I'll put my stop in tomorrow or the next day because I just might worry about it, because I'm on a roll. So leave the stop out or don't put it in, or I don't know, something like that, or or get a bit, get really heavy into a trade. Oh, this is really good, but rather than actually probably a normal sort of scaling up into the winning position, you just put it on big straight away because you think, oh, this is another good, another odd sector, just in another sister company. This is easy money. And then bang, too big, too quickly, it goes against you, and then you're like, oh, geez, they're deer in the headlights. And then next thing you know, you bank on a big loss. You think, oh, geez, I'll just give it half of, that gains that I've spent the last 3 or 4 months building, I've just given, bought all that back in in 2 days doing something stupid after all that hard work. So it just, so stay disciplined, keep the, as, what's the, I'm trying to think of, Mr. Trying to get the trade now, but basic process, just keep it, just gotta keep following it, stay disciplined there, keep reading your rules every day. That's where we know it. If you study that behavioral finance, the human beings are so flawed, so many weaknesses, so many biases there. So it's a reason why we just got to keep process there, keep disciplined, and keep doing the same things over and over again.
They're the insights that we should probably wrap on and say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.